you're slogging it out. You're like, oh man, if I could just sell this thing, it's going to be amazing. And then you do sell, you're working, and then you realize, wow, the grass is greener if I could start my own company again.
Andy Liu founded and successfully exited 2 companies, has nearly 100 angel investments, and a venture fund to his name. He knows firsthand that entrepreneurship can be lonelier than most people understand, and that the peers who truly get what you're going through can feel more precious than capital. The 23 years he spent in EO have been, by his own estimation, as formative as anything he's built. Of course, the community supported his business life. It also shaped how he thinks about health, parenting, and what it means to show up for the people around you. I'm Aaron Burnett, and this is Andy's story on Moments That Matter from EO Seattle. Tell me a bit about your story, your entrepreneurial journey. I know you came from an entrepreneurial family, right?
Yeah. My dad was actually an entrepreneur. It was up and down. I grew up wanting to be an entrepreneur. So I remember actually selling stuff around the house to guests that would come into the house, and always knew I wanted to be an entrepreneur. And so when I realized that engineering was not the path for me, I actually studied electrical engineering. I realized that wasn't my passion, and I wasn't necessarily world class at it. Decided to go to business school. At business school, that's where I ran into a professor sitting in there, and I was sitting in the back of the room, and he was talking about his research.
Yeah.
I was pretty curious whether or not he had thought about commercializing that research. And so I approached him after class, said, hey, have you thought about commercializing the research? He said, no. I said, how about I commercialize your research?
Yeah.
And naively decided to build a business around it. And this was kind of in the dot-com boom. And raised a little bit of capital.
You founded in 1999, is that right?
Founded it in 1999.
Yeah.
And, one thing they didn't teach you in business school is how to be an entrepreneur and really how to sell. I raised a little bit of money and immediately realized like I was in over my head. We built a product that nobody wanted to buy. And so we burned a lot of cash.
Yeah.
And realized really that the unlock there was you have to learn how to sell, selling everybody from employees to customers and so forth. So I picked up every book I could find on cold calling back then.
Yeah.
And learned how to sell. And we were able to start realizing like talking to customers was really important to crafting the product. And eventually we were able to turn it profitable and eventually sell it in 2004. So that was kind of the process of like working tirelessly and not realizing that you've got to kind of get into the weeds of talking to customers and really figuring out what it is you're trying to bring value to.
Yeah. I'm curious about a few things. I've heard you describe selling your family's furnishings before.
Oh, yeah. Yes.
Yeah. And so I'm curious, did you actually sell them? Did people leave with things?
So yes, I was able to sell some. But
Yeah.
It wasn't furniture. It ended up being like some gadget.
Okay,
that
right.
Nobody really cared about. But yeah, I had pricing on all kinds of different things around the house, and was always looking for a way to make a buck.
You said that the entrepreneurial environment in your family growing up was variable. There were some ups, there were some downs. So you saw the highs and you saw the lows before you ever started on your own journey. What did you bring to your entrepreneurial perspective right out of the gate that you learned from your family? And having seen the lows, why did you want to do this? Because the lows are pretty low sometimes.
Yeah. The part that was attractive about it was you could control your own destiny. I didn't really see my dad going in 9 to 5.
Yeah.
There was some variance there and some freedom in that. And I think that's the part that I picked up. I started working very early. So I started working full time at 15. Worked at large companies like at Boeing and Active Voice, but I went and worked at a startup. I was able to see from a bird's eye view, like what was wrong with the company. And so, I thought I could probably do this better than how they're running this company. And that gave me the inspiration to go start my own.
Yeah.
And then I realized, hey, it's not that easy. Looking for
Sure.
another seat in the house. Yeah.
And I've heard you talk about cold calling and frame it in what I find to be a really helpful way, that it's a numbers game.
Yeah.
You just need to talk to enough people and you'll find the yes among the no's.
Right.
And you just have to keep going. You mentioned that was the unlock for you with net conversion.
Yep.
What changes did you make? I know that it was talking with people. Did you change the product so that it was more attractive as well? What was the trajectory of the company? And I know you exited. How did that turn out?
When we built the product, we assumed that, that assumption is always a funny one because you really don't know unless you talk to people. And we assumed that people would buy the product that we built. Essentially, it was a way to help increase conversions on retail websites. It was a black box. We'd go out and sell, and nobody wanted it. We didn't really know why. The unlock for us was really understanding the pain point for the retailers. How are we actually addressing that? And what we realized was the product that we were selling, number one, wasn't really understandable. And number two, didn't address an immediate pain point. It turned out that we actually could dumb down the product and then it would sell. So we ended up changing it into a product that would track how people were navigating through a website and find out where people were getting stuck. That was interesting because they spent a lot of dollars trying to optimize their website and flying blind. So our product started really catching fire and we were able to turn it profitable. And there was a local company called Aquative that eventually sold to Microsoft. That it was a good match because they were doing media for agency work for a bunch of clients, and they would drive traffic, but in order to optimize the outcomes, they needed our service. So it was a pretty good match and a lucky outcome for us because we not only were we able to get cash out of the deal, we also got stock, which eventually turned out to be a really nice outcome.
Yeah, that was a big acquisition by Microsoft, right?
It was. Yeah.
6.3?
Yes, around there, 6.3, 6.6 billion. Yeah. That in of itself was an unbelievable journey because they went public during the boom. And then during the crash, it crashed down to 50 to 60 cents a share. And then they sold for close to $66 a share.
That's incredible.
Yeah.
For a lot of entrepreneurs, the exit is the holy grail. It's the thing they're thinking of when they found the company.
Right.
You exited very early in your career. In what way did the exit meet your expectations? How was it what you thought it was going to be, and how was it not what you thought it was going to be?
I think my experience was, it's so funny in life, it's always grass is greener on the other side.
Yeah.
You're slogging it out and you're like, oh man, if I could just sell this thing, it's going to be amazing. And then you do sell, you're working, and then you realize, wow, the grass is greener if I could start my own company again.
Yeah.
So then you repeat that cycle and we start the second company, and the same thing happened there too. And I think the learning for me is not necessarily grass is greener, but where you're at in that moment is where it's most green.
Yeah.
So I think this time around with leading a venture firm is just enjoying and embracing the day. It's nice to be recognized and have a cash outcome after the acquisition, but the journey is really where it's at. Until you experience it, I think it really is. And so I'm glad that that's how I'm living now.
Is your attitude toward your daily life and how you experience things substantially different from what it was in your early 20s when you started Net Conversions?
Yeah, I think it's night and day. I think it's good in the sense that in my 20s, I didn't have that many responsibilities, no wife, no kids. I could just pour in 100-hour weeks and it wouldn't really change, kind of how I would live my life and so forth. So that was a great time of a lot of high growth and learning and stress. I know that I was very inefficient. Working 100-hour weeks is not efficient. You're doing a lot of things.
Yeah, the last 40 are not the best.
Yeah. That's right. Now, with family obligations, but also, a little bit wiser in terms of, hey, where do I spend my time and how do I actually work on the business and not be pulled in 20 directions. Focus, I think, is something I'm a lot better now than I was 20 years ago. And I think I'm balanced now than I was then too.
So for me, there's an element of being an entrepreneur that has an undercurrent of anxiety. Things are good right now, but I'm always looking for the thing that might not be good that could get you in the future. And you're trying to anticipate and protect against and all that sort of thing. Given your family history, did you come to entrepreneurship with an undercurrent of anxiety? And did that change when you exited?
I don't know if I've ever encountered a time when there's no challenges. If it's going well, when is the rug going to get pulled out?
Right.
And if it's going bad, like, am I ever going to get out of this?
Yeah.
Right. Because I feel like every company has gotten kind of the Death Valley experience.
Yeah.
The process now is along the lines of, how do I actually work on myself such that I can handle these situations and be thoughtful about it? It's almost like just being more aware of your emotions and kind of where you're at personally, and realizing like, this is an experience that's going to challenge and make me a better person.
Mhm.
And with that sort of perspective, I think it's a lot easier to deal with the undercurrent, the
Yeah.
challenge that's underneath everything. It's almost like a choice too, because I do think, as entrepreneurs, we can get into our heads and you can get into a bad space very quickly. And
Right.
so the choice of like, hey, I'm viewing this as a human experience where I'm being challenged. There's nothing in life that's worth getting unless you're pushed and challenged. And there's a little bit of a trophy is not a great word for it, but there is this kind of like, hey, whatever the outcome is, like it is what it is. But this moment here, I'm gonna tackle it.
Yeah.
Yeah.
Before we continue, I want to tell you about the community that made this podcast possible. The Seattle chapter of EO, that's Entrepreneurs Organization. It's not networking, it's not selling to each other, it's real entrepreneurs sharing real challenges and solutions. If you have a business that does at least $1 million a year in revenue, and you're curious about joining a community that gets what you're going through, check out EO Seattle. You're famous in EO for your zest for life. You are, when we have conferences, last one to go to bed. You've been playing poker for 3 or 4 hours, and it's been a really intense, really fun game. But you'll also be one of the first up to take a run with everybody else at the conference as well. Did that zest for life come from those early entrepreneurial experiences and realizing that I need to savor every moment, or was that always there?
When I started working at 15, I realized like I had a unique skill, and I don't even know if it's a skill anymore because I'm trying to sleep more, but I didn't need too much sleep.
Yeah.
And so that allowed me to still operate pretty efficiently in the mornings. I think you put it well, as embracing life. I tend to say yes more often than no. The serendipity of that is really powerful. It's kind of an oxymoron to say, hey, you got to stay focused, but also there is this serendipity. You go and you say, hey, I'm going to hang out poker, or I'm going to hang out for a couple of drinks. And it's those moments where you're able to get a little bit deeper with other folks. You're able to connect. Whereas if you said, no, I'm going to go to sleep early, like you just miss out on those unique moments. And I've had some incredible relationships and friendships because of that. I wasn't really a morning person. So the mornings really actually started early last year, reading a book called The 5 a.m. Club.
Yeah.
I said, I'll give that a shot. And 1 year turned into now 2 years. So I'm really enjoying that. I feel like there's this luxury of being able to reflect.
I agree. It feels like stolen time.
Yes. Yeah. I'm like, where was this? I wish I did it a lot longer.
Yeah.
Yeah.
Yeah, exactly. So after net conversions, what was the next step? You intended to take some time off.
Yeah. At that point, I was still no family and no obligations at that point. So I was like, hey, let's take a year off and travel the world. It was 1 month. And what I realized is, in retrospect, is it's easy to start companies, very hard to exit. So I probably should have taken the full year, but started a new company a month after and did some things differently the second time around. It was in the TV space. It was a longer journey, a lot of twists and turns. We had acquisition offers early. I didn't need the cash, so we said no, and took on venture capital, and ended up being a 9-10 year journey before selling that to Vizio.
Yeah. I was reading a little bit about this is Buddy TV.
Yes. Yeah.
So acquisition offers early and also along the midpoint, right? So you had lots of ups and downs.
I mean, it was a fascinating time. The journey's never a straight line. So, there's the mobile revolution dramatically changed our advertising business. And then there was the social side, and then smart TVs and content moving away from cable. Like it was a lot of changes very quickly.
All right. So first 2 companies, 2 strong exits.
Yeah.
What, if anything, did you do differently in the second exit from the first?
A couple of really important things. One was working on the right things. First time entrepreneurs spend 80% of the time building product, 20% on go-to-market. Second time entrepreneurs spend 20% on product and 80% on go-to-market.
Yeah.
And I realized that that's the lifeblood of a company. Is you've got to build a very, very strong muscle for sales and marketing. And it's a great way to really get insight into where you should take the company. The closer you are to the customer, the better, rather than like locking yourself into an office and being the CEO of strategy. It's better to just always be out there talking with customers. I was a little bit more willing to hire staffing to take away some of the things that I wasn't very good at.
Yeah.
Whereas before I was like trying to save every penny and do everything myself. And then the last one I think is being a lot more intentional about culture. First company, less focused on it. And so the culture kind of just took a life of its own. Second, being more intentional about it, and now being very intentional and also working with my companies talking about culture, because ultimately culture is what's one of the largest differentiators, one of the biggest moats that you can build in business.
And so now you're managing partner of Unlock Venture Partners. Is that right?
That's right. That's right.
And you've been doing that for the last decade or so? Is
Yes,
that right?
17. So yeah,
Okay.
almost nine years now.
Yeah.
Yeah.
How did you come to venture investing? And also this very interesting space in venture where you're seed stage, right?
Yep. After my first acquisition, I had some angel investors that invested in my first company, and I got to know them pretty well.
Yeah.
So I was always fascinated with angel investing, what that really was. And so in 2005, decided to dive deep in angel investing. And over the course of 10 years, ended up investing in 95 plus companies. And I loved it. The energy from like meeting with entrepreneurs was amazing. Fed my ADD as well, just like,
Yeah.
tell me about the business. And it's just like totally different businesses than I'm used to, and learning from really, really sharp folks. And it was actually profitable as well.
Mhm.
And after learning some good lessons and also some good wins, in 17 decided like, hey, I would love to kind of do this full time and turn it into an institutional fund. That's really what led to starting the firm. And the premise of the firm is I want to build a venture firm that I would want to work with. We're different in a variety of ways. We're entrepreneurs at heart. We're blank sheet entrepreneurs as well. So early stage is kind of near and dear to our heart. And
Yeah.
whether or not we invest, we always want to see how can we help entrepreneurs achieve their dreams. If it's not money, it's at least a connection or a conversation or some way that we can be helpful.
Yeah. So had you invested in 95 companies before you started Unlock?
Yeah.
So you'd kind of done the job before you started the firm to do the job.
Yeah, totally.
What are the different types of investment that an entrepreneur should take on, and what should an entrepreneur look for when they go to raise money?
There's some misperceptions on fundraising, and a lot of it is because of what you read in the press, right? Like, oh, this company raised $2 million or $3 million, but there's no real context around why they raised the capital or why the investors invested. The key thing is investors are partners. Like once they're on your cap table, it's not like you can just kick them off.
Right.
It's like a marriage too. So you're contractually binded. And so if you have the wrong partners, it could really, really make life challenging. I've had those stories too.
Yeah.
So one is find partners really in the business that really care about the mission and vision and alignment and culture and so forth. And then I would really try to make sure that there's alignment in terms of what kind of outcomes financially are the investors looking at. And this is where I think there's another misperception on venture capital, because 99% of companies shouldn't take venture ever. Venture is a very unique asset class. It's one where you as an entrepreneur need to realize you need to shoot for the stars. It's not to get as profitable as you can as fast as you can. That's actually almost antithetical to venture. Venture is, I'm trying to get you to grow very quickly, smartly, but I want you to get to a Series A for another check. And then Series A to Series B, another check. And then I want you to go IPO or sell for a large sum. And for the entrepreneur, like you're selling a good chunk of the company. So you need to be aligned there to want to go that route. Most companies can do really, really well without venture capital.
Right.
And you can raise money from friends and family. You can raise money from family offices, different folks with different kind of goals and objectives on the financial returns.
Are there particular market segments that you're focused on for investment?
Yeah, when we started in 2017, it was very focused on AI and data. In the last couple of years, we've also branched into robotics, space, and defense as well. Generally speaking, we really focus on the entrepreneur. And then we want to make sure the space is sufficiently large, or the town is sufficiently large that it's an attractive market to be in, and something that we can be helpful in. It's a really exciting time right now. So
what makes this a particularly exciting time?
A couple of things. Entrepreneurs now can do a lot with a lot less capital. You can build these companies with small teams. And I think we're not far away from like a 2-3 person team building, $1 billion business. There's just so many amazing tools out there that you can build product even without a technical degree. So that means a lot more shots on goal for entrepreneurs and a lot more opportunity for us as venture guys to find, the next compelling company. There's just a lot more opportunity. I do think there's these like big mega trends, and we're in the midst of a big mega trend in space AI and robotics. If you were to imagine 10 years from now, like, I don't think it takes a futurist or anybody to say that our lives are going to be dramatically changed with the advancement of those three.
More so than any time in my life, I find it challenging to project forward 5 or 10 years and try to accurately think about and conceptualize what will be possible. Will be happening.
Right.
The degrees of freedom are so broad.
Yes.
It's just hard to know. So given the shift, given the fact that entrepreneurs can do so much more with fewer resources, and that you don't necessarily have to have the same technical skills that you did to start even a tech company, how has that changed what you look for in your founders?
Let's just say even 5 years back, there were entrepreneurs that would come and pitch you with a PowerPoint deck, maybe what I call design partner sign and so forth, and be able to raise capital on that. I think the bar for institutional capital, not necessarily friends and family. Friends and family don't look at a lot of deals. They're investing because they love you. But for institutional guys that look at a lot of deals, the bar is higher. If an entrepreneur comes and says, hey, I just got a PowerPoint deck, unless they're like a 3-time entrepreneur or somebody I've worked with in the past, it's very difficult to raise capital, because I would look at them in the eye and say, well, you could actually build this right now without my money. So why isn't the product already out there? Why don't you already have revenue? And so that's the bar now for early stage investing, is the entrepreneurs are really obsessed. They're building product. They can vibe code. They can talk to customers. They can get their first few contractors with revenue. And that I would say is the biggest change, is like the bar is just high.
Has the changed environment also changed your sense of the time horizon for next round of funding and maybe even ultimately liquidity event, right? Has that become compressed as well?
A lot of entrepreneurs want to do pattern matching. I do too. So the pattern matching, 5 years ago is, hey, if you can go from Series C to Series A, try to get about 3 million in ARR and you're in good shape. But now I would say the time is compressed because quality of the revenue matters. And the quality of the revenue is, how fast are you growing? So if you get to 3 million in ARR in 3 months, it's very different from 3 million in ARR in 5 years.
Right.
Where is that revenue coming from? Is it from companies that have deep pockets and can really start spending with you, and you've got these anchor names? It's like building a mall. You want Nordstrom's to be there, not Podunk Toys. If you have these anchor tenants, it pulls more business a lot easier. People are willing to do less diligence because they're like, oh, okay, American Express is a customer. I think you can actually go for the quality of revenue. And if you are able to do that quickly, your timelines are going to compress quite a bit.
So I think about your professional history, 2 companies, 2 exits, now successful venture fund. What do you see that other people miss that enables you to be successful?
I don't know if people miss it. It's where you focus on. And so what I've realized in our venture investing, there's a fair amount of luck too. Where we've been able to find a edge is evaluating the entrepreneur and the management team. We have a quantitative way of doing it, and we also have a qualitative way of doing it. I think that's the biggest signal to success versus our ability to really analyze business, because it's still very early. It's not private equity where you have a lot of history. We're probably better at the entrepreneur evaluation. There are a bunch of firms that are very successful at what I call thesis-driven investing.
Right.
Like, hey, we're all about robotics, and boom, we're going to do that. And so Seattle and LA are really interesting areas that are underserved. So there's an opportunity to find great entrepreneurs that we just have access to. We can diligence entrepreneurs faster and better than most.
What are you looking for in entrepreneurs?
One of the critical things that we want to find out is motivation. Being an entrepreneur, myself and yourself included, it's not easy. There are easier ways to make money.
Right.
So if you are all about the money, the famous last words is, my opportunity cost is too high. So they're 6 months in, it's not going well, particularly well. And I'm like, hey, just stick through it. You're learning a lot. You're going to figure this thing out. But they're like, hey, my buddies at Goldman are making X. I'm out.
Right.
So I want to know why they're doing it. Is this their life's mission? Is there something beyond money that's driving them? And that's really where I think you're going to find an edge. And so, we have a company that's doing well. It's called Possible Finance. We're trying to make it easier and more accessible for folks that take small dollar loans that are not egregious. It's a very, very purpose-driven company, and they want to make a dent. I think those things matter. So that would be one, is really trying to identify motivation. It also drives two, which I call kind of obsession as well. And obsession, it can be a bad thing, but what I'm looking for is, do you get energy out of the business? If you're going home and you're like, immediately, I need to grab a bottle of wine and I need to Netflix and chill, you're going to burn out. I enjoy reading The Economist or TechCrunch or whatever. Like, that's how I wind down.
Right.
I love that. It's like a hobby. So like, it gives you an edge as an entrepreneur if you truly are kind of obsessed. You're trying to figure out the puzzle in your head. And so those are things that we're looking for. I would say grit, like, how do you handle rejection?
Yeah.
So how do you handle uncomfortableness? And another one that I think is really important is what I call blow up risk. You have a partner in the business. You guys don't know each other well.
Right.
Once you kind of run through the fire, is one gonna just fall off, or there's just gonna be a huge blow up between the two? I'm not a relationship expert, but like, I do care about, like, does a spouse support you? Do they understand the journey that you're gonna be on? Have they had risk in their life? I've had companies blow up because the spouse is like, hey, you need to get a real job. That's the end of it.
Yeah. For myself, I can't imagine being anything but an entrepreneur. But it's the thing that I have to be.
Yeah.
Because it was so uncomfortable to be anything else.
Right.
And I know lots and lots of entrepreneurs who
Yeah.
are like that. Do you like that characteristic in founders? Someone who just, they have to work for themselves. It's the only thing they could do. Is that positive or negative?
Yeah, that's right. I think that is something I want to see in somebody. Like, they're built to be an entrepreneur.
Yeah.
Yeah. They've got the DNA, and not everybody's built to be an entrepreneur. So
Yeah.
the challenge is just this notion of self-awareness too. Right?
Sure.
Where am I weak at? Where am I good at? Like, how do I come up with solutions to these challenges in a process-oriented way? So the reason I bring this up is a lot of people think that they're entrepreneurs and want to be an entrepreneur. And they're like a dreamer of an entrepreneur. And then when you get down to pull below the surface a little bit, they're like, hey, I want to build a $1 billion company. And then I'm like, hey, okay, let's talk about, how do you get there?
Right.
And there's not enough depth there. That's the part where I think is the challenge. Is like, entrepreneurs are glorified, but how the sausage is made is a lot of time is ignored. And that's where I really want to focus. It's like, hey, the process is actually the most important. The journey is the most important. Like, what are you doing every day to give yourself a shot at that outcome, versus I just dream about the outcome and I dream about, being on Forbes magazine and so forth.
I think it's a lot like fundraising, right? The fundraising event is glorified and the outcome for an entrepreneur is glorified.
That's right.
But everything else is actually the important stuff.
And there's very, very few articles about like how difficult it is to actually like stay in the process and like grind.
So you were a 23-year member of EO. What brought you to EO?
Honestly, it was people that I respected that were in EO, and relationships that brought me into EO. And I didn't really have anything other than that. I was like, hey, these guys are cool, and I wouldn't mind hanging out with them more.
Yeah.
And they think it's cool. So like, okay, like I'll give it a shot. And so once I dove in and saw what it was, it's the easiest check that I write now. So it's just EO for life.
Yeah. All right. So you dove in, you saw what it was. What has EO been for you?
Life is generally, if you're not intentional about it, pretty lonely. EO for me is an outlet to do life together with people who are similar in kind of perspective and optimism, and people who kind of have your back. So it's like a community that you can identify with. Being an entrepreneur is even more isolating than people realize, because number one, like in the US, most people don't have deep friendships, but imagine being an entrepreneur, it's even more lonely. People just don't really get what you're going through. Yeah, that's why EO's been a kind of a godsend.
Yeah. How has EO changed you, or how have you changed through your time in EO?
I think that the big piece for me is just realizing like the issues I'm facing, everybody's had some semblance of similar experiences. And just that by itself is just very calming. Just dude, this is not a super unique problem that I'm facing.
Sure.
And I can get through this. There are peaks and valleys. There's times when I'm at the peak where I'm like, man, things are going really well. And I have nobody really to celebrate it with.
Yeah.
Your do life together forum mates. It's fun to celebrate with them. And I really enjoy celebrating their successes. And then the valleys are really important where, send a text message and say, hey, I'm going through this, and everybody's like, hey, let's do a emergency meetup at this spot. And that comes together is quite unique. And it's like smoothing out life.
Yeah.
Yeah.
Almost everyone else I know in EO, and this
Yeah.
was true for myself as well. As I
Yeah.
came into EO, I came to my first forum and I thought all these other people are going to be much more successful than me. I'm the only one who feels like I don't have any idea what I'm doing in some situation. And then I found out very quickly, oh no, everyone feels this.
Yeah.
You've achieved so much. Is that something that you still experience, or you've put that to bed?
I think it comes out in different ways for me. Definitely this notion of like, the screws are going to fall off. Like, I'm not going to be able to get through it. So
Yeah.
like those kinds of things will come up. VC is an interesting business, right? There are the top VCs, and I aspire to be one of the top VCs, and I am not. I've got a lot to learn to get there. Potential is there to get there.
Yeah.
But I don't know.
Yeah.
So like that is kind of the syndrome that I have, is I have to show this notion of like, I can add value to our portfolio companies. Maybe I am, maybe I'm not.
Yeah.
I'm going to deliver returns to our LPs. Maybe so, maybe not. I believe like I can play at the top levels, but I don't know if I can or not. So
Yeah.
like those are all open questions, and I have to live in that kind of ambiguity.
As you reflect on the last 23 years, how might your career have been different if you weren't in EO? How might your life have been different?
I've grown a lot as an individual, and a variety of things outside of business too. I've had some health scares as well. You are kind of a sum of who you hang out with. And
Yeah.
so I've been fortunate that there's been some really, really, I would say passionate health guys and gals in my forums, and have really kind of transformed how I think about health and how I prioritize it. And so now I feel, strong and healthy and have good rhythms there. And that's entirely due to a product of being with them. And I think if I didn't have EO, like I might have arrived at that, but it would not have been as straight of a line as EO has been. I think relationships with my kids too, like early on, I didn't have a family, but I always listened to all this amazing experiences around kids and so forth. And a lot of it went one ear and out the other. But once I started having them, dramatically changed kind of my perspective on parenting and how to hold dear these moments. And
Yeah.
I don't think I would have had that sort of insight or perspective without EO.
Yeah. You have 2 kids?
2 kids.
Yeah. If you could ensure that your kids had one characteristic, they may have others, but you can ensure that one is baked in.
Yeah.
What's the characteristic?
I'm always like, I can't teach them 10 lessons, and I have to model it too.
Yeah.
I would be most proud if they were extremely kind. So everybody that they come in contact with, there's a kindness to them and humanness to the connection. That would be amazing. And I hope I model it well for them too.
Yeah.
Yeah.
Yeah. That's a great answer. I've really enjoyed talking with you.
Yeah. This
Thank
is
you.
great.
Thank you for taking the time.